Has the U.S. housing market entered bizarro world, like the title suggests from Business Insider? I don't think so. You've got some basic supply and demand economics. They appear weird because they are, because we've been through a weird market. Let's get into it. Here we go. Right off the bat, they describe a U.S. housing market as distorting a core principle of economics, supply and demand. As supply rises, demand falls. As supply drops, demand increases, right? That should be what happens. Home prices soared in May, even as existing home sales fell, and the supply of homes for sale jumped. Well, okay, but fell from what point? Yeah, from record small, tiny numbers. So you've got very few sales going on, and when you have even fewer, it doesn't take much demand to take whatever inventory is out there and just send it through the roof. And that's what you've got going on. This one is a real head scratcher, the economist David Rosenberg said. Well, not if you're a real estate broker and not if you own a real estate appraisal company either. This is your new reality. Even though, and I've been talking about the fact that even though you've got interest rates that just spike through the roof, there's enough buyer demand out there for what little inventory there is to still be continuously sending prices up. Most markets went up 6-7% year over year. That's what they're kind of averaging. There are some markets that are getting a little bit more supply, and they don't have a plus in front. They might have, their median housing price might be dropping just a little bit, but it should be in free fall with the way interest rates jumped from record lows to record highs in recent years. Law of supply and demand is a basic principle of any free market. And right now it's being subverted by strange happenings in the real estate market. It's not strange. It's unusual. But from the standpoint of where we've been to where we are now, it makes total sense, because what you had is an unusually low interest rate environment. And then you've got unusually high, and you had inflation in there, which we were told was going to be transitory, but it hasn't been. Supply of homes for sale was rising while demand for homes is falling. And yet housing prices continue to hit record highs. There's still enough demand to outstrip what little tiny supply there is out there. So when you hear supply and demand, think in numbers relative to, okay, but where have we been? Where are we moving forward? When you have sales dropping, that's because you've got very little on the marketplace. And so when you do have a handful of sales, they tend to really amplify things. And people here in the Pacific Northwest, we are back to multiple offer situations, massive acceleration clauses. You'll go from 1.5 to 1.7 in a heartbeat like that in order to win a bidding war. And you've got that happening all over because there's not enough inventory for all the tech bros. When it comes to the housing market, the law of supply and demand doesn't seem to apply any longer. It does if you dig just a little bit deeper. So if you're not an economist like this guy and you're actually in the trenches selling homes, then you kind of understand, okay, yeah, even what little inventory we do have is being bought, and it's being bought in a way that is accelerating pricing. Rosenberg said existing home sales dropped to a 4-month low in May to 4.1 million units because there's hardly any inventory on the market. So you don't have the homes on the market. Nobody wants to get off of their 3%, their 2.75% mortgage. So they're not putting their home on the market. What few homes are going on the market, there's enough demand to take them down and create that upward trend in pricing, which represented a year-over-year decline of 2.8%. That is home sales, while existing homes available soared 18.5%. More people are feeling comfortable. Hey, I'll put my home on the market. I'll get top dollar. All right. So I got to move to another home with a higher mortgage rate. Okay. All right. But marry the home, not the rate. I'll refinance down the road. That's what people are thinking. The unsold inventory backlog has risen from 2.9 months in February to 3.2 months. That's a little bit, and that is a national average. Here in the Pacific Northwest, we've got still under 2 months. And even if you're at 2 months and you've got just a little bit of demand, it's not enough housing to make the market go. It's not enough housing to make the market balanced. And so that's why you've got rising prices in these markets where you've still got tech jobs coming in. Yet despite falling demand as measured by the drop in existing home sales and rising supply, median home price jumped 5.8% year over year, and that's on a national basis. So how can we have this? Because there's so few homes on the market, and the market still has a pulse as far as the buyers go. This one is a real head scratcher. Demand at 4-month lows, supply at a 4-year high, and prices at unprecedented heights because the numbers are based on this really constricted marketplace. Really constricted. And that's what happens. Part of the disconnect is the fact that real estate is a regional, localized market, with some areas being stronger than others. Okay, agreed. Texas and Florida, for example, have seen home prices decline amid a boom in the supply of homes for sale. How much have they declined, though? A scooch, not a ton. It also has to do with mortgage rates, which are hovering at multi-decade highs of about 7%, and that has been dropping. So people are entering into that marketplace. And I have said that if mortgage rates hit 6%, your property values are going to go. That's what's going to happen, because you're going to have so many people that are sitting on the sidelines right now waiting. They're pre-approved, they're underwritten, they're whatever. They're just waiting for that rate to drop from 7 down to 6, and it's game on. That has boxed out a lot of would-be home buyers, rates going to 7%, and locked in would-be sellers who don't want to refinance their next home purchase at higher rates. I don't blame them. We're in this frozen marketplace because nobody wants to put their home in the market because then they got to go buy at these higher rates. But as those rates get a little bit lower, a little less painful, you're going to have buyers jump in. And so now your housing supply that's creating some modest increases in the median housing prices, it's going to fuel that fire and off-take prices. That's what I've been kind of talking about. So some market experts believe housing prices are poised to fall in a big way. I don't think they will. You don't have enough supply for them to fall. You have big numbers, even 3 months 4 to 6 months is considered a balanced marketplace. We haven't had that in years, literally years. So we are used to having this undersupply, this lack of supply. And that's what's driving so many markets, because you've got buyers with the rates the way they've been. And even at 7%, markets are still going up. They're still going up. Low mortgage rates would help ease borrowing costs and drive demand as more borrowers could rush back to the market. The famed investor Barbara Corcoran has said that a decline in mortgage rates would send home prices soaring even higher. It's not that hard to figure out, right? The minute actual interest rates come down just 1 more point from 7 to 6, everybody's going to jump into the market and you're going to be paying a lot more for your house. So do you wait for rates to come down because prices are still going up? So, a year ago, 2 years ago, say, you're looking at buying at 7 and 7.25, whatever it is, maybe it was close to 8 at that point in time. Do you wait for that rate to drop? Because prices are still going up. So as you wait, all right, 10% more on $1 million. Now you've gone from $1 million to $1.1 million. Okay. Does that make any sense? No, but nobody feels comfortable jumping into this really high interest rate environment because they look at their mortgage payment and go, good Lord, that's a lot of money. And it is, it's crazy. These are just crazy numbers. Here in Seattle area, we just went over $1 million for our median housing price. Yeah, $1 million, median, right in the middle, half below that, half above that. That is just so expensive. But there's enough buyers. There's enough tech bros. Take those stock options, liquidate them. Hey, let's get myself a starter home, $1 million starter home. So that's where we kind of sit. Interest rates have been trending down because you've been seeing more and more information coming out that is pointing to, at some point in time, the Fed will probably do a rate drop. We'll have to see. And if they do, and we're sitting where we are and the inflation numbers come in the way that market kind of thinks they will, you see rates drop down to 6. Oof, yeah. And you're going to be back to a hot market. And given where we sit now, This is a hot market considering rates going from where they did way high and, supply having increased a little bit. Because you got to remember when they say increases, it's exponentially gone up. From what? From some absolute rock bottom lows. So it's all kind of relative, right? So what do? Do you jump in now? Talk to your mortgage broker. Have them run those numbers. Have them run those numbers of, okay, we're looking at 7%, year over year, median housing price is increasing. So if I wait this amount of time, what does that look like? Is the house going to be more or less affordable than if I just jump in right now and buy? That's what a lot of buyers right now are kind of mentally trying to weigh. And also what you're seeing is you're seeing buyers jump in because they have to. They've been relocated, job transfer, life changes, want to be closer to the grandkids. Those kind of things are happening as well. Whereas when rates first jumped up, I think the market was just kind of frozen. And that's in basically July of 2022. So we've been in 2 years of this just kind of quagmire of, hey, look at those rates we had in the past. Weren't those great? Don't want to move off of what I got right now. So why would I? That is starting to break as well. So you're seeing a definite thawing of the market. You're seeing some price increases. And then you're seeing economists go, this is weird. And it is kind of weird. But if you actually kind of dig down and look at the numbers, it makes total sense to me. I've been talking about it for a while. All right. That's it for me on this one. Thanks so much for being here. I'll catch up with you in the next segment. Bye for now.